When US stocks get cheaper, I'm more eager to invest in US stocks. My stock portfolio is very simple. US index, cash equivalents, Berkshire Hathaway. That's it. Cash equivalents has changed over time. When I started investing in my 20s, it used to be GICs. Today, it's short-term government bonds. It's simple, easy to manage. It's very similar to Warren Buffett's 90-10 strategy, which is 90% S&P 500, 10% government bonds. John Bogle also has the two-fund portfolio, which is total US stock market, total US bond. In my opinion, there's no reason to stray too far from the masters. But again, the devil's in the details. This is the performance of the US stock market relative to international. You can see in the 70s, international outperformed the US. This flipped during the 80s, and then again, international dominated in 85 to 91. Throughout the 90s and the dot-com boom, the US outperformed. During the lost decade, 2000, 2010, international outperformed. Over the last 14 years, the US has outperformed. Contrary to popular belief, I bought most of my US stocks and Berkshire Hathaway during the period at the turn of the century when international outperformed. International outperform is the best period to collect US stocks. The worst is when the US outperforms. Why? Because when international outperforms, prices are low. When US outperforms, prices are high. When the US outperforms, it doesn't mean that I stop investing altogether. What it means is that if I have a set asset allocation, let's say 60-40, 60% US stocks, 40% short-term government bonds. During US outperformance, I'm pretty close to the 60-40 maintaining that asset allocation, but when international outperforms and US underperforms, I start eating into the non-equity portion, the 40%. So I start investing a little bit more into cheaper US stocks. The longer that international outperforms, the more that US stocks will start taking up my asset allocation. It might go from 60-40 to 70-30, 80-20, 90-10. As US stocks remain inexpensive, I start buying more. When the cycle changes and the US starts to outperform, my asset allocation goes back down. 90-10, 80-20, 70-30, 60-40. So I am always investing. But when US stocks get more expensive, I get slower investing in US stocks. When US stocks get cheaper, I'm more eager to invest in US stocks. Learn the lessons about money that your parents and teachers forgot to tell you. Download my free newsletter linked off the bio. Good luck. Take care.